The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I am having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Ronald Dale. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. We have the Dow Industrials up 56, NASDAQ down 1, S&P's up 4.5, gold contract up $5.70, trading at $1,190 an ounce. Silver up 10 cents at $16.98 an ounce. Platinum up 5 at, up 10, cool, at $1,149 an ounce. Copper up 5.5 pennies at $2.83 a pound. Light sweet crude up 74 cents, trading at $47.31 a barrel. Bonds, you have the 10-year up 5 ticks, 128.27. The 30-year down 5 at 164. And King Dollar's giving it up, baby. She's down 8.86 at 97.28. The euro is up 124 at 109. And the yen is down 21, trading at 119.85. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So if we go to the SPY first, the SPY right now is at 210. I'll put the SPY up for you instead of the future. Okay, we're going to do the future too. But the SPY right now is at 210.69. The high that was generated out here in February is 212.24. That high is going to get tested. If you do this and you put this on that's on the daily. If you put this on a weekly basis, what you're going to see is that last week, as we're pushing higher, you're pushing higher into that bar with some juice. Last week we did 758 million shares. That's coming into that high that is out there that we did 400 million. So that high wants to get tested. We go over the NDX 100. We take a look at the 3 Qs. What you have with the 3 Qs is this. 3 Qs are trading out at 108.61. The 3 Qs, the high in the 3 Qs is 109.42. If we do the same setup, now there's going to be a little divergence here, which is pretty cool. So if we do the same setup and we bring this into the weekly basis, what you're going to see with the 3 Qs is this. The 3 Qs are pushing. We pushed last week with 148 million. Now the high itself had 106, and let's see, 148. No, the high had 111 million. 111 million. So that's pushing with volume. That baby is going to basically get tested also. The IWM has already taken it out. The IWM is a small ABC structure on the way up. That little baby had taken it out, the B point out on the Wednesday, on March 18th, took it out with volume. We did 40 million shares as we got over the swing point. A to B equals C to D. That baby is doing an ABC structure on the way up. And what that has to do with, too, by the way, that is a lot of these commodity stocks, these small commodity stocks. Gold contract. Let's go over and we take a look at gold. What we have with gold is this. Gold contract. First time that we had buyers last week. We had wide price spread. We had accelerated volume. We had all of the above. That was a beautiful thing, no doubt. So right now, the gold contract, we're trading out at 1189.50. The correlation, okay, what gold did versus silver is this. Gold had a really sweet day on Wednesday. That's when we went from the price point of 1144 to 1175. However, it couldn't hold the 1175, back down to 1151, went right back topside. Now what we have is this. Your first price point that gold wants to go after is the swing point that was at 1223. Well, I'd like to see another wide price spread accelerated volume, because then that would set up the deal of 1308. Well, we had inside the gold market, the silver market, the equities, gold and silver equities, they had the wide price spread accelerated volume also. Now, if we go over to silver, silver is set up really sweet, and silver had a monster day on Friday. What we did with silver is this. Silver exploded with volume on the way up. We're trading at 16.98, and silver's going to basically lead everything up. So silver broke that downtrend from the January 24th level. Right now, we're trading out at 16.97. Silver wants to make the run to this 18.35 area. And I expect the way that the XAU, the HUI is trading, bottom line, if we go over and we'll look at those quickly, let's see. So if you look at the XAU and the HUI, first we hit the XAU. What you're going to see, the XAU right now is at 70.87. Can't make the argument that it wants to go up to the highs just yet, but this is a consolidation. It couldn't break out its low, so it's going to try to break out its high. First run that it has to get over is the 77.63. That was the high that was generated on February 27th rather. If we take a look at the HUI, the Gold Bugs Index, same type of setup in the Gold Bugs Index. Gold Bugs Index right now is running out at 173.27. That little baby, 194 is the number that you want to be looking at on the way up. That's going to be your next swing point. Now, King Dollar. This is really cool, folks, okay? We've been talking about the A to B equals C to D structure. King Dollar, what it had done, it did a 1 to 1 point, it did over a 1 to 1.618 ABC structure on the way up. What it did is a 1 to 2. Now, anytime you do either over a 1 to 1.618 on the way up or the way down, it's an immediate change of trend in the marketplace. When I say immediate change of trend, it's like, okay, is it 5 trading days, 4 trading days, 10 trading days? Bottom line is every time this happens, and believe me, over the course of probably 25 years, I've only seen it happen about 4 or 5 times. What happens is that it's always like, okay, when's this going to happen? This time, bottom line, came right in again, came in about the 9th day as it extended the 0.618, gets to the 2, and then bang, just gets hit. When the Fed come out with the announcement on Wednesday, we went from 100.12 down to 94.76. We get volume down there. It went sideways the following day, tried to make it back. See ya, don't want to be ya. You're at 97.29. And my take on this is an immediate change of trend. It is a long-term change of trend. If you happen to be in the metals market, you're going to have some fun. Because the bottom line is that the whole world, thank God, is still bullish the dollar beyond belief. This is typical of markets. That's just how it goes. And I know if you look at it on a fundamental basis, it's hard to comprehend, like, how the heck is this happening? Why? Because bonds, number one, the Fed saying that, okay, they're taking the patient out of the statement. Bonds, our short-term rate should be going up. Well, guess what? When you look at the correlation that's out there, bottom line, the market is saying bonds are basically not going to go up. They're still going to go down. The 10-year right now is still trading at 1.9%. That 1.9% on a 10-year basis is the highest rate in a developed country, folks, okay? So the bottom line is that where do you want to put your money to make some money? This is going to be a supply and demand issue. And the amount of supply out there versus what the demand is, you're going to see it shake out. If we go look at the bonds, we use the TLT, the 20-year plus. And when you take a look at this TLT, what you have is this. The TLT right now is at 131.31. We came in with wide price spread, took out the swing point last week. On Wednesday, the 18th, we did 13 million shares. You blew away that swing point with 8 million shares. What does that set up? That sets up a high, man. That sets up the 138.50, which is just, yeah, it's wild, folks. But bottom line, bonds look to me that you're going to have lower price, a higher price, lower yield. Right now, you have the 10 years trading at 1.9, and you go to France, it's trading at 0.4%. Germany's 0.2. Spain, who's broke, is 1.2. Give me a break. Portugal's 1.7. You know, bottom line, you get the gist of it. What you're going to see out here is that for somehow, some way, these These bonds want higher price. Some of the high volume stocks that you have out here are trading today. We have Apple up $1.41. Now that it's high volume. Facebook's up $1. American Airlines is down 132. Some of the Dow stocks. Well, let's go to the IBB. So the IBB, folks, has been driving the NASDAQ. I mean, the IBB in a big way. What we had on Friday, you had an expansion topside big time, too. IBB did 3.3 million shares on Friday. Hits a high of 374, closes out at 366. Now you're backing down off that IBB. So it's going to be interesting to see, will it come off those highs with juice? This is Tom O'Brien. This is TFNN. You stay right there, folks. I'm coming right back. Dow is up 44 right now. Nasdaq's down 4. S&P's are up 2.5. Gold's up 520. Silver's up 11. We're going to right back.
As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers, and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Let's go to the world of Big Blue, good old IBM, and see what's happening with IBM out here. IBM, folks, has been in this consolidation for a long period of time, and every single time that we get up to this level, it gives it up. The level that we're talking about is that 165 level. The swing point that it's going after right now, we're at 165.09. The swing point that it is going after is this 165 level flat out. And what that's all about, if we bring this back, what you're going to see is that the gap, when it had gapped down on in October, the top of that gap is 170. The bottom of that gap is 166.69. Now, we came down with 23 million shares. You know, you're going back up once again with 3.8. The last time we were up here, we had 4.7. That was generated on the 24th. So the way that this is getting into this level, it's going to need a lot more volume to basically get into that gap. You know, we'll see how this baby does shake out. But thus far, that's how that's shaken out. If we go over to a couple of the rails are getting really smoked. If you take a look at Norfolk Southern first, and more than likely this has to do with basically moving oil. Norfolk Southern is down 3.3. You're going into a swing point. It's blowing it away big time. The last swing out here, we had 2.3. We're already at 2.5. UNP, same type of setup. It's pretty amazing, though. And it makes sense. It took these things a bit to fall apart. But bottom line is that fall apart they did. And the UNP, this is a nice ABC structure in the way down. You're taking the B point out today. Thus far today, we've done 5 million shares. Your B point there only has 4.2. And guess what's hanging out like a sore thumb? That's right, October 15th. Right now, we're at 113 and 96. 96 is game. That's where this baby wants to run into. So we'll see how it gets there. Apple. Let's go over to Apple. We take a look at Apple. Apple, of course, got into the Dow on Friday. Bottom line, for a market that went extraordinary high on Friday, it's pretty amazing that Apple couldn't handle it. What Apple had done is this. Apple actually came down with that market going after its swing high. We did 68 million shares on Friday, and the way Apple is still trading, guess what? The S&P wants to make that high, but Apple is not even close. We take a look at Alibaba. Alibaba, this is a trip in itself. Alibaba can't get out of its way. So this baby right now, what we have, Alibaba's trading out at 84.66. You have a high volume swing low. That high volume swing low is hanging out there at 80.17. And what's going to be pretty wild, folks, is that will that be able to blow away its swing low? You know, because if that blows away its swing low, let me tell you something, man. There'll be some big problems out there, because this is a very large, well, let's put it this way. It can be a very large ABC structure on the way down. That's how this thing is setting up right now. You know, it's just set up, and it's set up really nice. There's no two ways about that. We go over and we take a look at the euro. You know, we talked about the aspect of the dollar. Bottom line, my larger take on the dollar, folks, is that the dollar's done, period. You know, it was really cool. This one's really cool. So check this out. The way that dollar has been trading, the dollar can just have a correction, and the dollar has gone nonstop up since May of 2011. So in that correlation, you could just have a normal correction, and a normal correction would bring the dollar back to 89. That all 89 is a 50%. Let me see if it's even 50%. Might even be a 0.32. If I give you the most conservative one, check it out. So the most conservative one, even in a bull, as if the dollar's still in the bull, would be a 92. And you're at 97 right now. A 50% retracement is 89. So bottom line is that you can expect more volatility out here. This dollar wants to go after that high volume swing low that it has, and I expect you're going to see a lot more. And what that's going to do, that's going to continue to basically put some juice inside the metals market. Oil. Now let's go to oil, because oil is still teetering on really getting blown apart. So we take a look at this oil market, and what you're going to see is this. Yeah, she might be off the bottom. This is pretty cool, actually. Okay, so let's take a look. So oil's at 47.28. Yeah, you can make a case she's off the bottom. Okay, so this is what you're going to need. At 47.28, she's going to test the 48. And if she could get a wide price spread going tomorrow, she'd have a shot. That's what's going on here. This is pretty cool, actually. What you had is this. Last Wednesday, Thursday, and Friday, you had volume each and every day. We had 380,000 contracts. Wednesday, 370 on Friday, on Thursday rather, and then we had 370 on Friday. Now today we get 268, but what we haven't done is gone into the 47.48. Oh yeah, we have. Interesting. It's staying at the top. We have tested the high volume of Tuesday. It's hanging at the top. This has a shot, though. This has a shot. So if we got a wide price spread accelerated volume, you want to be all over this. The reason being is that a dead cat bounce in oil can get you up to like the 64 mark, which would just be a total mind blower. We go over to, now in that correlation, if we flip that around and go into the XLE, the XLE, of course, is the large integrated oils. Don't touch it, because what you have inside this XLE is you got what we've done out here today. You've done 8 million shares. It tried to get off the bottom last Wednesday. It went to 77.95. We did 27 million. It's anemic. There's no buyers there. And that's going to be all about, folks, is the highest weighting structure inside the XLE. And that's good old ExxonMobil. ExxonMobil just can't get out of its way. When it broke down, when it broke underneath this 86.19, it did it with volume. Bottom line is that even on Friday, this couldn't get out of its way. Yeah, I expect, can it test the 86.37? Yeah, it can, but there's nothing there. And inside the XLE, that's ExxonMobil's your largest weighting. If we do take a look at Chevron CVX, that would be the other one you want to look at. Chevron is stronger than ExxonMobil. But that also couldn't hold price today. What this already had done is this. Chevron had got to 107.69 today. It's trading at 106.40. And what 106.40 does is gets it under the high of Wednesday. You're going to have lighter volume. That's a rejection of higher price with lighter volume. That's saying, guess what? It's going to back down. And that's the way it's shooting out here. Inside the NDX 100, what's moving the NDX 100 today out here? This is what you have. Staples, that's a joke. They're going out of business. They're not going out of business, but Staples, the leader out here. Baidu.com is up $4.99. Mondelez is up 72 cents, and you get Wynn Resorts up $2.68. What's taken away from the NDX 100 is Vertex Pharmaceutical. That's down $6.59. Celgene is off $5. You get Nvidia down 71 cents, and Micron Tech is off 72. Inside the Dow Industrials, what do you have that's moving it? Biggest mover in the Dow Industrials today is Pfizer. Then you have McDonald's up 188, Big Blue's up 233, and ExxonMobil is up 101. You stay there, folks. We're going to have our man, Mr. Bill Corcoran, on. Bill is the CEO of Better Trades. You stay right there, folks. We're coming right back. Dow is up 43, Nasdaq's down 8, S&Ps are up 2.5. We're going to break back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 46. You get the Nasdaq down 5. S&Ps are up 3.5. We have gold up 620. Silver's up 19. And right now we got our man, Mr. Bill Corcoran, up. Bill, folks, is the CEO of BetterTrades.com. Want to welcome to TFNN. Bill Corcoran, how you doing?
Doing well, sir. I appreciate the opportunity.
Absolutely. So tell us, I know you you specialize in equity options. You're coming into New York City, I believe, right? And you're going to be doing a workshop there?
We are. We're doing a 2-day workshop on Thursday, Friday, and we're doing a free 1-day workshop for folks who are trading and wanting to learn to trade options primarily on the eSignal platform.
And okay, so this is going to you just cut out on me, Bill. Is it Wednesday and Thursday that we're doing it?
That's correct. We're doing a free workshop on Wednesday, and then we're doing our advanced workshop on Thursday, Friday.
Okay, cool. So tell us, when someone's going to the workshop, exactly what are they going to learn?
So at the workshop, we primarily are focusing on taking folks who have some experience in equity trading, understand a little bit about the technical analysis, maybe some fundamental analysis, and show them how to use options to either leverage their positions or to protect their positions, their long and short positions using equity options, and how to execute those trades on the eSignal platform.
Nice. Now, I know you go around the country and do this. What are what are the pluses and minuses when you bring students into your classes? What do you see that you really like, and what do you see that you got to help them with quite a bit?
Our biggest experience with students is that most of our students are retail level traders, mom pop investors who are looking to better their lives and find ways to add additional income to their portfolio. So what we see is that people tend to get in too big a hurry. They're over leveraged to their positions. They're exposed to too much risk. They're trying to take too big a piece at one time, and they really don't understand the dangers that can be inherent to trading options if you really don't understand time value decay, if you don't understand the role of implied volatility in those option trades. So what we try to do is to fill that gap, to teach people what those dangers are, what those risks are, and how to mitigate those risks and create additional income streams for our students.
Yeah. It's interesting, and this is, inherent, folks, in any type of trading business. But in the option business, what happens is that, you can imagine, Bill, that if it's you or me or someone else, if you do the first couple option trades and you do really well, it's really easy to say, oh, I'm going to buy 15 contracts now instead of 3 because I made so much money, right?
and that's exactly right, Tom. People get excited. They make a little bit of money. The options market is kind of funny. It's kind of like Vegas. It'll let you win just long enough for you to stay in the game to lose. Right?
Yeah,
and
no, there's no doubt. And it's really important, as Bill just said, folks, okay, it's a great market, but as any other trading business, it's about money management, right?
Very much so. Money management, risk management. The beauty of options trading is that you can build hedges against positions that will to work to minimize those risks. And that's really a lot of what we're moving into nowadays, is teaching folks how to use the options market to hedge their positions, to minimize and mitigate the risk to the extent possible, and to take the profit as it comes.
Now, when we're dealing with options, of course, what has happened is that the weekly options exploded, and the aspect of weekly versus monthly options, they're different than the aspect of what the decay would be. That's for sure. When you're basically teaching this out, what do you kind of like better? Is there one that you like better than the other?
Well, it's kind of funny because on the weekly option kind of gave you 4 times as many opportunities to lose, right, in the same period of time.
Yes.
So it really did create some significant opportunities, but I think people tried to take advantage of it many times in the wrong way. One of our favorite trades is to trade very high intrinsic value options for a very low cost on expiration Friday. It's something that only happens on the expiration day. So now we had 4 times as many opportunities to do that. Gives me an opportunity to go in on a stock like a Google or a Priceline and buy very high intrinsic value with very little time value for an intraday move on Friday on big moving stocks. But most people don't do that. They buy the weekly option early in the week. They're subjected to just wicked time value decay throughout the week, and they don't understand why it's not working for them. So having that understanding, if it's kind of like owning a chainsaw. It's great unless you don't know what you're doing. You can cut your leg off. Right?
Yeah, listen, man, white lightning, there's nothing like it, man. I mean, I grew up on white lightning on the OEX, so it's
there you go.
That's and there's no doubt. It's a really cool. I mean, if you take the right risk parameter, folks, what happens on white lightning, and white lightning is Friday and option expiration, the bottom line is that you can get whether it's the diamonds or the Qs, you're going to get something at 50 cents or 70 cents, and guess what, that's all you can lose. I mean, that's what's it's a really a decent deal, in the context, if you're really wrong, it's such a defined trade. It's amazing.
Yeah. Yeah, exactly. So, we do like the monthly options for longer-term trades. Big fan of selling calendar spreads against those longer-term options because now with the weeklies, you have the opportunity to do that 4 times as often. And so we've got great opportunities to hedge off risk. And these are all things that we talk about and teach in our live workshops all over the country, Tom. We do workshops in every city. We got a big one coming up in New York. And, just an opportunity to get out there and meet the folks, teach them the power and the danger, right? I mean, every power tool has dangers, and we show you how not to cut your leg off and, how to cut down the tree, so to speak. So,
and folks, the site is bettertrades.com. You can see the whole schedule actually as it's going across the country right there. Now, when you're setting option trades up, whether they're call spreads, bear spreads, or just a directional trade, are you using technical analysis? How are you setting them up?
Absolutely. Technical analysis is core to what we teach. In fact, my mentor, I actually came into Better Trades as a student. Believe it or not, I saw a TV commercial years ago about trading in the stock market. I went to one of their workshops, came in, paid my dues, and went to the classes, and through the years actually rose to the point of being the CEO of the company. So I understand it from a perspective. And one of the mentors that I've had all these years is a lady by the name of Markay Latimer, who's become a very good friend of mine, one of our coaches in Better Trades, and she is, I would say, one of the best at teaching technical analysis in the country. And if you don't understand the technical analysis side of it, it becomes very difficult to trade, especially in the short term. So technical analysis is one of the cornerstones to what we teach and show people how to use that in very real terms in the options world.
And what are do most of the folks when they first start just do calls or puts? Do people get into spreads now?
It's kind of ironic. Most people will say, I'm just going to do calls and puts because it seems more basic, right? It seems more simple.
Yeah.
When in reality, you're much more likely to lose more frequently on directional call and put plays. Now, if you can manage risk and manage your emotions, that's okay. But we teach a lot of debit spreads now because of the reward to risk ratio that's associated with those.
Right.
And been teaching a lot of directional butterflies, believe it or not, using option pinning as an indicator for picking the short strike on the butterfly. And we're generating massive rates of return in our practice trades on those, where we may have 15 or 30 cents at risk and pick up $4.85 of profit at the end of the week.
Now, what have you seen? It's really intriguing because the market has been a one-way market for a good 4 years, right? So, do most of the folks come in and just buy?
You would think that they would, and that worked in the 90s, late 90s so well that you'd think more people would get it. But it's amazing when people want to come in and they want to pick where it tops, isn't it? And so they want to predict.
I'm one of those crazy people, I know. Believe me. I'm just curious.
Exactly. And it's interesting when people will do that. What we find is, of course, by buying and holding longer dated options, call options specifically, and call spreads, that people can do a little bit better.
Right.
One of the best performing strategies in the daily morning lab that I teach every single day has been the synthetic long, where we just have been going in and creating the synthetic equivalent to owning the stock and just holding that position and selling calls against it, and it's just been phenomenal in this market.
Yeah, no doubt, no doubt. Well, listen, man, we appreciate you coming on. Folks, you can go to bettertrades.com. He's going to be in is going to be in New York, Tampa, Baltimore, Houston, San Diego. Just check it out. Hey, Bill, thank you so much. You have a great one, safe one. I'm sure you're going to have a great workshop in New York.
I appreciate it, Tom. You take care of yourself. I appreciate the opportunity.
Absolutely. Have a great one, man. Have a safe one.
Thank you.
And what does happen, folks, there's no doubt, as we just went through option expiration. Bottom line is that what is interesting out here is that if we talk about max pain inside option expiration, those numbers were getting hit, and they were getting hit pretty good on Friday. And the rails absolutely fell apart today. And they were showing, actually, last week they were falling apart. They did a counter trend bounce on the way back up, and guess what? They fell apart again. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow right now is up 39. Nasdaq's down 7. S&Ps are up $2. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. The Dow right now is up 33. Nasdaq's down 8. S&Ps are up 2.5. Let's go to John in Austin, Texas. Hey, John, what's going on?
Afternoon, Mr. O'Brien.
How you doing, man?
I never knew it could get this good. How about you?
Oh, it's always dangerous when you say that to me, you know. I have nightmares about you sometimes. I'm saying to myself, no, you know what's so cool? I'm not kidding. So check this out, right? You know, the first couple times you call, I says, oh, man, it's always dangerous when we make money, because then all of a sudden then you get hit, right? And it's like, oh, man. I love it. Don't get me wrong, okay? But I'm cognizant of it. But
no problem. Yeah, buddy. Hey, the gold report, you know, it just advertised that. You know what I've said about it before. It's absolutely unbelievable,
listen,
man.
I think we got a good run happening now, but I just had to get that out anyway.
Yeah, no problem, man.
So you want to look at EXK first?
Either one, and I know you're short on time.
No, we can do both of them. Let's do both of them, okay?
But let me ask you this.
Yeah.
What I wanted to ask you is that I know they've moved up, you know, almost 15-20% here shortly because of the silver's moved so much. So the question one is, what do you see the retracement at on those? And if you could pick one of them and do that ABC up structure, and then I'll try to figure out the other one, please.
Okay, so the two he wants to look at, folks, is Endeavor and AG, okay, which is First Majestic. First Majestic is a stronger one, okay?
Okay.
That's traded at 613, and this is what it is. This is why, okay? So if we take a look at this, what you're going to see is that First Majestic, you know, came in with some juice last week. It's coming into the swing point. The swing point it's coming into had volume of 2.9 million. Last week, just on one day, we did 6 million. Today, thus far, we're doing 2. And what you're going to see, once you put this on a weekly, if we set this up on a weekly, I suspect what we're going to do is that we're going to run up to this 715, because on the weekly, that's a decent swing high that has some volume on it, okay? So that looks to me like it's going to get tested. And, you know, that's not bad. We're at 615, okay? Now, if we go over to EXK, this is what happens at EXK. EXK needs a little more juice. You know, EXK had decent volume on Friday, like the rest of them did. You're trading at 185. And as soon as it got back inside the 185, that's a big positive, because it's say, okay, we can make it to 317. I'm just kind of giving you the heads up in general that AG will move a lot faster and further, you know.
Okay.
You know, because when that moves, so watch. Now, that's the technical. Now, watch what the fundamental is on this, folks. This is a trip. What AG has done is this, and I've interviewed this guy. I've talked to this guy twice, the CEO, which is Kenneth Niemeyer. When silver was going down, right, he didn't sell his silver. He played a Rob McEwen. And what he did is that he held the silver off. And it looks to me like he's actually made it, meaning because silver turned. Now the real question is going to be, when does he start selling it? Okay? When Rob McEwen did this, folks, I'm bringing you all the way back to like 2003. What had happened is that Rob McEwen at Gold Corp at that point kept his gold, didn't sell it until, oh my God, we started the gold report at 282. I don't think he started selling gold until like 475. I don't expect Keith to do that, but what Keith will do is that whatever price he thinks that, you know, silver should be at, or that basically they maybe need money or whatever, he'll start unloading silver. But what you can see is that in the aspect of where silver is right now, and where it was, okay, you're talking about millions of ounces of silver. So that expansion inside of AG will go quicker because they have their silver, man, and they just didn't push it out. And I suspect, you know, they will. But that's what you get driving that fundamentally also, which is pretty cool, man, you know?
Great, buddy. I so appreciate it. So 715 and 317.
Yeah.
You would just go ahead and just take the profit there, and then wait for the next run.
Not necessarily, because we did the update in the gold report today. The full one's going to come out tomorrow. It looks to me that the way this is going to shake out right now, this doll is going to fall apart, and I suspect we're on a run. Meaning, and what happens is that when you're on a run in the metals market, folks, they don't let anyone in. That's kind of how this shakes out, and all we actually need is one more day of strength, and one more day of strength will take many of these equities all the way up to the February 27th highs, and then people will be scared to buy, so that means that they could run right to the February 2nd highs. So I'd stay right there for right now, man.
If it were you, if it runs up to this 715 and 317, and it say it just starts to consolidate or pull back a little bit on lighter volume, would you be adding as I'm going up?
No, what you do is this. Let's say, okay, we'll start with AG. Let's say you're up at 715, right? And
yes,
the daily volume on that up there is 15 million. No, weekly. Let me get this straight in front of me. 1 second. What you could do is that you could say, okay, listen, I'm going to take off my principal, and then, you have 100 shares left or something. Do you know what I'm saying?
Yes, sir.
That is something you could do.
Okay.
I wouldn't take off the whole position, but there's nothing wrong with taking off your principal. Bottom line, take off your principal, and basically, if we consolidate, what will happen is this: if we hit that level and the volume expands, do not take off anything, because that would mean that we're going to run right to the and AG will be running right to the September. Yeah, it'd be running to the top of the consult. Well, it'd be running to 819 at least.
Okay.
Because there's nothing in the middle. See, if we get over that 715, there's nothing really to stop that thing. Until about 819.
All the best to you and your family, Mr. O'Brien. I so appreciate it, buddy.
Have a great one, man. Have a safe one.
Take care.
Dow right now is up 5. You get the NASDAQ down 10. And let's see what's inside that NASDAQ, what's hitting that NASDAQ, because that's intriguing. Let me look at that IBB. The IBB's been driving the NASDAQ. That's not that bad. That's down to 787. Some of them are getting hit. And this inside the S&P, it's been all about information technology. But bottom line is that coming into the close, they just can't handle it. When we come into the next hour, folks, we'll not only do the update, but I'm going to bring you over to those rails, because those rails getting smoked. And what is intriguing is that we knew, when I was looking at the rails, it was like, okay, yeah, you have the oil, but you get a lot more than oil. And it's Kansas City that came out with a warning this morning. Which basically hit all the rails, because what is really interesting inside that warning, because it's not just the energy, which I wasn't thinking about before. What it is, you got the oil coming up, but guess what you have coming in that they were making a fortune on? All the sand. All the sand that they were actually bringing in, bringing the oil back out was huge. And then check this kicker out. This is a kicker. This comes right off the UPS Federal Express deal. And what it is that because oil has gone down so dramatically, they have to come down on the surcharges. So the bottom line is that everyone was making money on fuel surcharges. Now they're blaming that oil comes down, and guess what? They're not making their profit centers, and we all know that wasn't supposed to be a profit center, but guess what? It is. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Looks like the market's going to be flattening out. Dow's up 2, Nasdaq's down 4, S&Ps are off 2.5. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We're here 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes out here and see what we have today. This is by Maya Angelou. I believe the most important thing in life, the most important thing beyond discipline is creativity and daring to dare. No doubt. Market-wise, let's take a look at it out here. We had the Dow finish down 11, NASDAQ off 15, S&P's down 4.5. They whacked it at the end, folks. Gold contract up $5.10, trading at $1,189 an ounce. Silver up 15 cents at $17.03 an ounce. Platinum up $10 at $1,149 an ounce. Copper up 13 pennies at $2.90 a pound. Light sweet crude up 82 cents, trading at $47.39 a barrel. Bonds, we had the 10-year up 6 ticks, 128.28. 30-year flat at 164.01, and King Dollar. King Dollar is dead. I got to get a new name for King Dollar, folks. King Dollar down 996 ticks, 97.17. Bottom line, change of trend, big time. We've had this trend going on since May of 2011. Even if it's a dead cat pullback, bottom line, the euro would be a dead cat bounce. My take is that we got a different dynamic, and it's a change out. Reason being is that we did over a 1 to 1.618. We did a 1 to 2 ABC structure in the way up. Whole world is bullish the dollar now. They were bearish the dollar when we were bullish the dollar down at 72 and 77. But life's a trip, no doubt, folks. That's kind of how it goes. Nothing is up forever. Nothing is down forever. Euro's up $1.33, trading at 109. And you got the yen down 28 at 119.76. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, first, let's go to the world of the futures, because what we did have out here is that coming right into the close, you get a little downdraft at the last few minutes into this close. The futures, they basically took the futures down, pretty quickly, actually. We had traded up to a high of 2106. It finished out at 2095. Not the end of the world. It's only 11 points, but 11 S&P points is quite a number. So what do we have up here? Well, let's go to the SPY, and we take a look at the SPY. The SPY closed out at, let me bring this up to put this on a daily again. So the SPY closed out at 210. We had 70 million shares. We got to a price point of 211.11. Now, the high of Wednesday was 211.27. Bottom line, this wants to test the high, okay, meaning up there in February. The February 25th high was 212.24. So I figure somehow, some way, this thing's going to get up there and test it. It couldn't get to the Wednesday high today, but we'll see how that shakes out in the next few days. The NDX 100, the 3 Qs, same type of setup in the NDX 100. Because what you do have, folks, is this. You got to expect after a day like Friday, bottom line, market's taking a break, all of the above. The 3 Qs, they closed down 21 cents. What you have, however, is this, is that the highs that were generated out here last week were pushing into the highs that were generated from March and February, depending on the ETF and indice, and they were pushing with them on volume. So that's saying, you know what, it wants to go up there and at least try to whack it. On the 3 Qs, that's 109.42. That's the way that baby is set up at this particular point. Gold market. What do we have with gold? Gold wants higher price. Bottom line is that the last few weeks, gold was pushing the lows. You were pushing the lows with light volume. It was showing that there were no sellers. However, we didn't have any buyers in the market until last Wednesday. Last Wednesday, you had the wide price spread, accelerated volume. Gold contract did some nice volume out here today. Followed through 156,000 contracts. You're at 1189. The next stop on this baby is 1223. And because 1200 is a psychological number, folks, I expect we're going to buzz right through that baby and get somewhere up to about the 1236. And the way they're trading right now, it looks to me like we're actually going to be up there tomorrow. Because when you move off bottoms, folks, you move off bottoms very quickly, particularly after the type of consolidation that the gold market has been in. Because they continued to basically push it down And there was basically no more sellers. All the sell stops are gone underneath, and that sets up a nice, clean acceleration on the way up. Silver's leading the way. Silver right now is trading out at 17.003. Bottom line, this is what's really cool about silver is this. Silver is coming into, it's actually into right now, the downdraft that was created on February 17th, and you're coming into that downdraft with volume. And that's hard to do, folks, okay? If I do, I'll put the correlation up of the SLV so you can just kind of see how this works. And the SLV is the iShares Silver Trust. What the SLV has done is this. So when we got whacked on the way down, silver had come down with 15 million shares. Well, we did 14.7 million shares on Friday. That's how you want to see a supply line get taken out. That's what it really comes down. That's what it does come down to. The SLV right now is at 1633. The SLV is making a run up to the 1769 level. So it's a nice little setup all around. If you get into the XAU, the HUI, you're going to see the same type of setup. This is XAU out here closed out at 70.81. That's making the run up to that 77.63. And we get into the HUI, what you're going to see with the Gold Bugs Index. Gold Bugs Index right now is trading out at 173, and that wants to make that run up to the 194 level. And what is that all about? It's all about King Dollar, folks. King Dollar came off the highs with volume. It's making its way down into the high volume swing low that was generated the day that the Fed came out and said that they're taking the patient statement out of the federal policy minutes. As they did that, the dollar took conniptions, the euro took conniptions. Bottom line is that what I expect you to see first is this. The spike low is 94.76, which is a lot lower than we are right now, folks. We're at 97.16. But you're also coming down, and you're coming down with some juice. Now, if we get down to this low, what that does is it puts it inside a different range, meaning that now you have a spike high. That spike high couldn't hold. Then what you have is this. The consolidation could hold it for a bit, meaning is it a week, week and a half? If the dollar, and I suspect the dollar is going to, but as I walk you down here, so first you get to the consolidation. You consolidate for a bit. The dollar slips under 94. Guess what? The dollar slips under 94. The dollar's going to be at 89 in a heartbeat. That's going to be shocking. It's going to be, that's going to be like shocking in an incredible way. Bottom line, that's the way it looks like it's setting up. Now, who knows why the euro wants to go topside? But the way this market is trading right now, that's what it looks like. Now, let's shift gears for a second. I want to go to KSU. The reason being is that Kansas City Southern, okay, this is one of the largest KSU rail companies out here. But I want to show you something. It's going to be all of them, folks, okay? It's pretty amazing what you have out here. So KSU came out with a warning this morning. The warning they came out with specifically was that they are not going to do the numbers that they thought they were going to do. And what it had to do with is this, okay? Now, we shot one rail right now. We shot a couple of them last week. And what was really intriguing is that I'm saying to myself, man, these things aren't acting good on a market that's going up. And inside that, technically it was set up, but fundamentally it says, you know what, this is an oil deal. But check it out, it's more than oil. So when Kansas City came out this morning, what they were talking about was this. It's not only the oil that they're not grabbing out, but guess what? They're not bringing in sand. Okay, and sand they were making a fortune on bringing it in to North Dakota, South Dakota, fracking. They're not making money on that. They're not making money on the oil coming out. They're not making money on the coal coming out. And on top of that, they're not making money on fuel surcharges. So what ends up happening with Kansas City, that gets whacked $9. It's at 106. But the bigger issue, if you put this back, what you're going to see in every rail is doing the same thing, folks. They're doing monster ABC structures on the way down. And what you're going to see is that, first off, the October 15th swing lows, Kansas City had it, the first October 15th swing low. That basically got blown away. In January, had a higher swing low. Guess what? That's going to get blown away. Bottom line is that these rails are coming down, and what to get from Kansas City was pretty extensive. So the next stop, we're at 106 right now. The next stop is down there at 93, and I suspect that's not even going to hold. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow finished down 11. NASDAQ off 15. S&P's off 6.5. 5.5.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers, and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. So we're talking about the rails, folks, and the rails are going to get hit. They're getting hit a lot of different ways. In the press release from Kansas City this morning, they're saying they're getting hit, number one, from the oil not coming out. They're getting hit from the fracking sands not coming in. They're getting hit from the coal not coming out. And they're getting hit because they can't charge the amount of surcharge that they have been charging on a continual basis as the oil price has come down. The thing that's amazing about the surcharge in particular is that the surcharge, of course, was supposed to be just that, a surcharge, specifically that they are paying out for more oil. Bottom line is that now that the oil has come down, the first ones that came across saying that they weren't making money on that was Federal Express. Now bottom line is that these are huge profit centers for these companies. And we can see that, you know, I remember years ago when first it was Boston Electric, when they put them on, it's like, oh man, hold it. You know, when it goes up, you know, it goes up, and when it comes down pennies. Bottom line is that, yes, they are. So if we run through some of these oils, what you're going to see, Union Pacific, the A point in Union Pacific is 124. The B point out here is 114, so you got $10. C point's 118, that's going to 108. Right now, broke the B point today, broke it with volume at 112. That's set up to the January 15th swing low. But you know what we have out here, folks? And this is going to be one after the other. So this game is not over on the way down. And the October 15th swing low on the rails are going to get hit. And the October 15th swing low on Union Pacific is 96. So that is one big number. If we go over to CSX, and when you see how these layouts, so sweet, man, it's actually crazy. CSX, and you want to see something with volume blowing out of these. They blew out of these like left and right all over the place. CSX today, what do we have out here today? That came down from 35 to 33. It's going after its lowest swing point of 33.44. Haven't hit it yet. We'll wake up in the morning. We'll go after it. And what do we have? High volume swing low, $30.77. Next one, and this is every, well, let's see if it's every one of them. That's let's see. I did Union Pacific. I did NSC. We actually shot this one. This is Norfolk Southern. Norfolk Southern blew away its swing today. Did monster volume. You know, this baby came down out here with 3.2 million. You have two separate areas for Northern Southern. Northern Southern Corporation. The first is 99. You're at 106. And what do we have out here? Bottom line is that that October 15th swing low. Well, actually, this one here. Now check this out. This is what kind of a bounce you can really do. The October 15th swing low on Northern Suffolk was 102. It goes from 102 all the way up to 116. So you go up 14 points, or 14%, 12%, right? You go up 12%. You come off the high, and we talk about this a lot. When you come off a high with volume, what is it? It's problematic. Well, guess what? You come off the high with volume. We come off the high the first day with 2.3 million shares, second day 5.4 million shares. You go from a price point of 118, then you go break the October 15th swing low, you go to 101. You do an additional counter trend bounce to 112, go south again to 101. It runs up to the 112 again with no volume, no one's in the store, blows apart again. Bottom line, you're going to see lower prices out here, dramatically lower prices. Let's go take a look at Canadian Pacific and see if they're set up the same way. CP. So what we do have, let me see this. Yeah, that's up there too. So CP out here today did 668,000 shares. She's coming into 700. Not as intense, but she also has the December swing low, and she already took out, oh, this is a trip, man. Yeah, and she already took out the October swing low of 180. That's going lower too. Last one, let's go look at, what is this one? Oh, this is going to be interesting. This is in, okay, so let's check this out. This is in Wyoming. Now this should, GWR. Okay, so GWR, let me see this one. This comes off the high. So this is, they operate short line ones. Okay, so this is a short line railroad. The high is 106. This just came off the high. So the way this is trading, yeah, this is off the high with volume. Unreal. Okay, so check it out. So we come down to $1.95 today, which is nothing, by the way, okay? But what you had, you were actually pressing into the lows on Friday with volume. option expiration when the whole market was topside. You take a look at this and you put this on a weekly, and what you're going to see, this is a classic. You can really learn a lot from these folks. I mean, a lot. Because what you have is that it was charging to get into the high period, which was June of 2014. Not 014, 14. That's 106.02. We hit 105.59. Couldn't handle the high. We did that on a weekly basis, 105.59. On a weekly basis, we did it. Come off that high, and now this is going to be a kicker. You get an acceleration of volume this week on this baby. What it's going to have then, it's going to be coming off the highs with high volume. There's no doubt that the volatility is out here, but some of these companies are going to get hit, and they have got hit, and they've got hit in an incredible way. There's no two ways about that. Let's go back to the SPY for a second, the SPY. The SPY out here, really, what you had out here today, folks, is a flat market. And that's expected, by the way, after the expansion that you had the last week. The real key is going to be, can it get into these highs? Now, I expect it's going to, because of the way that we pushed into the high with volume. If we take a look at this, what you're going to see on a weekly basis is this, is that bring this down so it's a little bit clearer for you. When you take a look at the SPY, what the SPY has done on the daily, it's not as evident as the weekly. The weekly is quite evident when we came last week that this was pushing into it with volume. We did 750. We did 755 million shares, pushing into the high that only had 400 million. So that's saying that wants to get tested. The thing that's still out there, which is really a quirk, really, is that the week of December 19th, that's where we did 1.2 billion. And the print out there is 212.97. I can't really figure out if it really got to that 212.97 or not, because it looks like it was just a quirk that it got up there. But the volume characteristic is there. The volume characteristic out there for the week is 1.2 billion. And last week we did 755 million. And I can tell you that what is always strange is that around these highs and around lows, there always seems to be these bad prints. And if they're not a bad print, it's basically just a push. And I believe the day that was actually happening, I was saying, is that going to be basically a electronic message to other traders that, hey, that's where we want to push this baby to. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming back with our man, Mr. Chad Coco from TD Ameritrade Thinkorswim. And don't forget, tomorrow, noontime, best option show on the planet right here, sponsored by TD Ameritrade. And all the programming at TFNN, get right on your cell phone. TFNN.mobi. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we had the Dow Industrials finish down 11. NASDAQ was off 15. S&Ps were off 4.5. And as we do each and every Monday at 20 past the second hour, we have our man, Mr. Chad Coco from TD Ameritrade Thinkorswim. Chad, folks, has the best option show on the planet. You want to know options upside down? Come over to our website at TFNN. Every Tuesday, 12 to 1 Eastern Standard Time. You got to remember something. All the programming you can get at TFNN, you can get it right on your cell phone. We do live programming from 8 o'clock in the morning to 6 in the evening. It's tfnn.mobi. If you'd like to get the Tiger TV, where you're going to see all of Chad's charts. Just go to TFNN.com. On the right-hand side, you'll see a little box. We'll say mobile devices. You hit that, you can get the audio, plus you can get the video. And if you haven't test drove the Thinkorswim platform yet, great time to try it. Hit the banner. You can bring the platform up. They'll put paper money into your account so you'll understand just how dynamic this platform is, whether you're trading options, equities, futures, or currencies. It's all on one platform. Chad Coco, what's going on?
How's it going, Tom?
Good, man. Hey, well, listen, man, we had quite an option expiration here. Holy cow.
Sure did, yeah, especially right at the close. Everything just kind of flew around.
That was, I'll tell you, I've seen times when, volume does come in, but man, did that come in. I mean, it was interesting, too, it was fast and furious, and some of these equities moved and others just stayed flat, but that volume came in a big way, man.
It definitely did. I was trading Apple myself, and in the last 2 minutes, it dropped 3 points just right at me. I was like, whoa, out of nowhere. Kind of knew it was coming, but...
I know, man. It was interesting. A couple of tigers in the den were talking about that. How the heck could they hit the future S&P, and they got what had happened, folks, is that right at the close, okay, it was just pretty wild how it shook out. They basically brought that baby down, and they brought it down pretty quick. It was only 4 or 5 points that they brought it off, but that makes a difference, of course, for a lot of whatever those closes come in at. You know what I mean?
Yeah, it definitely does. If you were watching the options market specifically, you could see all the open interest.
Yes.
And everything was like pegging to the strikes like it usually does, but it's kind of cool to be able to see like theory come into play and really pan out the way you think it's going to.
You know what's so cool about that? And what Chad's talking about, folks, I'm sure most of our listeners know, because one of our talk hosts, Dave White, he actually did a free webinar that this week on the max pain and on pegging it, okay? And there's no... what's amazing? It's like, how the heck can it get pegged? But it totally makes sense, I guess, because it's basically the degree of risk that they want to take, right?
It really is, yeah.
Amazing. So as we set up the new option month, how do you normally set up a new option month?
Take a look at just different products that you're interested in. Take a look at the implied volatility in those, and if it's really high, and perhaps go into a selling strategy, low buying strategy.
Yeah.
I'll be talking a lot about that tomorrow, specifically around volatility and volatility numbers and products you can trade around that.
Yeah,
that's what I need to look at.
No, I can see that too, man, because the volatility and the decay aspect is so big. It's amazing. What's interesting is that when we were at the last Traders Expo, right? I was listening to a couple option guys, and one of them in particular was saying that, hey, listen, man, every time the VIX spikes, bottom line, it's scary, but, just sell it. You know what I mean? I'm saying to myself, man, and I was watching it. I says, no, I'm not going to do it, but I was watching. But sure enough, that's exactly what ended up happening again. Do you know what I mean? It's like, and I'm not suggesting you do it, folks, okay? And that was another successful option trade. There's no doubt, though, because it just got killed again. It just went from, bottom line is at 16, and now it's at 13 again,
Yeah, that's the problem with that product. I mean, it flies around a lot, so just because it's up one day doesn't mean it's going to stay that through expiration.
No, and of course, it's going to be, what is that one day that bottom line is that you sell it, and the bottom line is that, you're at 19 the next day instead of basically back to 11. Do you know what I mean?
Right.
Yeah. So when we look at it's going to be intriguing here is the aspect of, will there be a change in how Apple trades now because of being in the Dow Industrials, as to, I guess we know that any type of Dow fund has to buy it, and how are they going to basically, are they going to hedge themselves, and will that be a difference?
Yeah, we'll find out, I guess. But
yeah.
I'm kind of expecting a little bit more options trading on there, even though there's a ton already.
Yes.
Maybe more NASDAQ options being traded just because of that hedging against it.
Okay.
We'll see.
And when we look at the biotechs, what do we have happening in those biotechs?
Honestly, I haven't looked at anything today.
Okay.
In terms of
no, I just mean in general. Do a lot of people trade the biotech options?
Yeah, not so much the options. We see a lot of traders trading biotechs. The problem with the options market, they're so illiquid. It's kind of hard to get out if you get into a position.
Okay, that was my question. That's good to know, man. Yeah, because what has happened, I guess, until that's been a one-way trade. I mean, there's no two ways about that. Yeah, I see this when I pull them up. So 350s, the IBB. I see. The IBB is pretty good.
Yes. Yeah, there's some that have it. I'm not saying none of them, but the majority as a whole, from everything I've taken a look at, there's just not much going on.
Yeah, and what happens, I believe what you're probably saying, the spread's too much, huh? Interesting, because I can see this IBB spread. That spread's, well, the market's closed now, but it seems like it's not like trading the SPYs or the diamonds or Google or Amazon when you're talking whether it's a 2 penny wide or a nickel spread, right?
Exactly, yeah. Then like the weekly options, so IBB specifically, if you look at the weekly options, there's really no open interest in any of those.
Okay.
Well, some of them, but not very many.
No, that's important. That's because what happens, folks, is this, and I've been in this situation. I was in this situation years ago, Chad, in the gold market, and this is what ended up happening. What happened is that you can always buy them, folks. That's what it comes down to. You can buy them. Then I'm going to sell them. And as I'm going to sell them, so check this out. As I'm going to sell them, the spread was insane, and they would sell them to you and make a penny, but to buy them off you, it was like 20 cents less. And these are very small stocks, okay? I says, okay. So you know what I No, you know what I ended up doing? What I says, okay. I ended up going in the equity market, right? I had the option orders out there. I went in the equity market, and I started buying the equity.
Get the option move.
I jammed them on the other side. It was the only way they could go up. Do you know what I mean? And then I had the sells on the other side. But it was like, okay, man. But that is frustrating, what Chad's talking about, folks. You do not want to be trading options that are illiquid, okay? Because what ends up happening is that when you're looking at them, they'll sell them to you. But when you go to buy them, when you go to sell them back, what ends up happening is that, you know, if you can be the bid. If you think or swim, okay, bottom line, yeah, you can go out there and bid them, but then you got to have someone else buy them. You want the maker buying them, and you want them basically being liquid in an incredible way. No two ways about that.
Yeah, it's kind of funny when you're trading those illiquid products. You put your order in, you can see the bid or the ask move to where your order was at, and change your order, and it moves right back to where you were at again.
Doesn't it?
I'm making the whole market myself.
It's wicked. No, I know, man. I know. And you know, folks. You know, when you're on some platform, play with that a little, because then you can really see the aspect. No, that's cool what you just brought up, man. There's no doubt about it, you know, because it's important. And then what's also important inside the option market, folks, is this. You got to remember something. They're in the business to sell product. So if you have a fill that's not getting filled, well, just sit there and let it go into the close. Because you know what I've seen many times, Chad? Not all the time, but going into the close, you might get another nickel. I mean, it's still going to be under... They still got to make money, but as they're going into the close, it's okay. I'll take it. I'll take it. I'll let you make some more money, and I'm gonna. They're still gonna make money. It's not like they're gonna not make money. They make.
A pretty good point that we see here. So we always have clients coming in saying, like, oh, my order's not getting filled right away. It's like, if I put an order in and I get filled the second I put the order in, I put in a bad price. I probably get something better for it.
Yeah.
It's a different way of looking at it.
No, it's a great way of looking at it. It's huge. It's absolutely huge, man. Listen, folks, don't forget, tomorrow, 12 to 1 Eastern Standard Time right here at TFNN. Get it right on your cell phone. And, of course, you're kicking into spring there, right?
Yeah, but we had 3 inches of snow this morning, so.
Oh, my God.
Not giving up yet.
That's sick. 3 inches of snow, man. You're not giving it up yet. That's like the market's not giving it up yet, man.
I know. We had 70 degrees last Monday, and this Monday we have snow.
Wow.
Now get used to it.
Yeah, listen, man, you got to get used to it, and you got to smile, right?
Sure thing.
Okay, man. Well, listen, thank you so much for a great education. Looking forward to a great show tomorrow, Chad.
Good talking to you.
Okay, man. Have a great one. Have a safe one. That's pretty amazing. 3 inches of snow. That's crazy, folks. Okay. Well, guess what? We're still coming into spring. There's no two ways about that. And don't forget that show is tomorrow, 12 to 1 Eastern Standard Time. We take a look at the equity markets out here. Bottom line, you had a flat equity market. S&Ps were flat. The trade out here, folks, one of the larger trades, my take is going to be the metal trade and the dollar. This dollar is going to be, it looks to me like this dollar is going to start shocking people. And I'm not quite sure, you know, what the fundamental deal is underneath it, but they're selling it like crazy. And, you know, it's just possible. The euro, it was so wild in the euro. The euro is at 109 right now. The bottom line, the euro wants to run to this 115. And you get a euro over 115, well, then you're going to be up to 122. You know, it's like, okay. You know, that is, that's going to be a 50% retracement of the move down. And that's a normal retracement, by the way, folks. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back. Dow Industrials are down, closed down 11. NASDAQ off 15. S&P's up 4.5. Gold up 4.80. Silver up 16 cents. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say You can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow finished down 11, NASDAQ down 15, S&Ps down 4.5. And bottom line, let's get over to that gold market and take a look at how actually the GLD has been trading. So the GLD, folks, when we take a look at this, it came off the bottom, had juice coming off the bottom, and that's after testing the high volume swing low that comes all the way back to November 5th. So November 5th, we had a high volume swing low at 109.67. We get down to 109.77. This is just crazy how this works. It blows my mind, actually, because it's like, and what that was, if you're in front of that was March 17th, and what had happened March 17th was this. In the futures market, they jammed the futures down. They pushed them under 1149. They went to 1142. Now, as they jammed under 1149, there were no more sell stops under there. Well, they got it down $7, but it snapped right back. And what that was all about is cleaning out the bottom. And before any big operator was going to buy, they wanted to see, are there more sell stops down there? Well, guess what? There wasn't. Zero. It just kept going down. Nothing accelerated. And what we had in the futures market, you had basically a reversal there. When we came down the GLD, you're going to see how clean this is. We came down the GLD, and you hit that area with 8.9 million shares versus 13 million shares going back on that November 5th time frame. Okay, so that satisfied the test of the bottom. It was a clean test, great test, and it's always dangerous being at these bottoms, particularly in the gold market, because they can blow it away in about 2 seconds flat. Now, what we also had is this, is that as we're coming into it, what you want to do, you want to coordinate that with the daily, then let's coordinate it with the weekly. So when we do the weekly, what you're going to see is this, is that we came down, we hit the price point of 109.77, you did 39 million shares for the week. That 39 million was going into the 107.67, so it's 10 cents higher, and you did that with 44. So the correlation there also worked. Then what do? This is where it gets to be fun, because after the identification that you have come into a low, bottom line, and you get a rejection. So what happens is this, you can get a rejection of price, but then if you don't get buyers, guess what? You can keep drifting lower. That's just no buyers. Guess what? There's always going to be sellers. You need buyers. So what happens? Bang. We had the buyers come in the market. Buyers come in the market on December 18th. You had an expansion of 12.4 million shares in the GLD. The 12.4 million was going against, and this is what's really cool here, folks, it was going against the downdraft of the 6th of March, and the 6th of March we had 11.1. So what is that correlation? That correlation is you go into a bottom, you have lighter volume on the daily, on the weekly. You come off the bottom, you have higher volume going into the supply line. That's what you need. Now what do we have? We're into the gap. That is a beautiful thing. We're at 14.29. The top of that gap is 114.84. What I expect you're going to see, and this is what's cool about where we closed out today, what I expect you're going to see tomorrow is you're going to get an expansion into that low, and if you're a bull in the metals market, what you want to see is you want to see a piercing of 114.84. The top of that is 116. You'd love to see it go right into the 116. I expect what you're actually going to get is this, that you're going to get not only to the 116, you're going to get into the 117 area. And it's set up that this baby can get that tomorrow. The reason I'm saying that is that it has to do with the dollar index, how the dollar index was trading out here today, and how the intraday setup is. And in fact, if I put this up here for a second, let me just show you this. Because the dollar index, right now, if I put this on a 10-minute chart, what you're going to see is that we closed out, and we closed out at the 97.23. Well, what you have, if I bring this, I got to bring this back. Let me see. I got to bring this back a few days for you. One second, I'll put it on the daily first. Because what you have is this, is that there's nothing between here and the spike low that was generated out here on the day of the Fed meeting. There's just nothing to stop it. So I suspect it's going to get down there much quicker than normally would happen. When you move 1,000 points inside the currency market, folks, that is insane. And if you are trading the currencies or the commodities, get over to the Nadex platform. Check out the Nadex platform, because you talk about defined risk. That is absolute defined risk. You don't want to be trading these currencies in a currency market. It's not unheard of, but it's very unusual when the dollar starts making 1,000-point moves. That is you don't want to be inside a normal currency market when it's doing something like that. You do want to be inside an option-based market, which the Nadex product is. Why? Because you have defined risk, number one, and you can be out of the money, in the money simultaneously. But I suspect what you're going to see out here is that the dollar index is going to go after that swing low. Now, as it goes after that swing low, your correlation is going to be, you get the juice inside the gold market. Guess what? It's going to twist everything around in a heartbeat. And that twist, by the way, sets up this, okay? Because the way that the gold contract has traded on a much larger basis is that we're 1188 right now. And when you take a look at this, baby, the way it's set up on a monthly basis, you're inside, yeah, we're already there. We're already inside the 1179, which was the June 2013 swing lows. So the way that's set up right now is that first, the run is to 1307, but you can make the case that it will go to 1428. You know, we'll see what happens there, because it went below the lows of June 13th. It did it with lighter volume. It rejected it. It's above it right now. And what that whole time, what that was doing is that was going into the December and the November swing highs inside the gold market, where there were high volume spikes. That's what this market had been doing. So every which way you look at this correlation, bottom line is that it's saying that, guess what? The actual, look at this whole vibe. I got to show you this too. So when we came down in the GLD into that 104. You're at 114 right now. As soon as you're at 119, forget it. It's off to the races and spades. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow. Wow! Go get them, folks.